Good evening and welcome to You and Your Money. I'm Bryan Hirsch, and this installment we are focusing on short-term insurance. In the latest National Financial Ombud Scheme, which is abbreviated as NFO, in South Africa, which presents itself as a comprehensive one-stop dispute resolution service, combining the Ombudsman for short-term life insurance, the Credit Ombud and the Ombud for banking services, quite a mouthful. One of the primary reasons they claim the insurance claims are denied is due to policyholders misunderstanding their coverage details. Many individuals fail to thoroughly read and comprehend the terms of their short-term policies, leading to unpleasant surprises when claims are submitted. It's often only then that they realize they're underinsured or have not met the necessary terms and conditions for coverage. And joining me this evening from the Jurgens Group is Greg Britz, Managing Director, and Shane Pickles, Sales Manager. Guys, thank you very much for joining me. Good evening to you.
Good evening.
Guys, I know it's a lot, but I said in the opening, what are the main things that you should tell policyholders? Firstly, how many policyholders read a policy? That's for starters.
Zero.
No, I have read one, so I'm one.
There are a few. I have some, and it's nice when clients read their quotes and they unpack it. So there are a few.
It's good to read 11 o'clock at night, you'll fall asleep.
No, if you want something to sleep, then read a policy word.
Yeah,
that's exactly right. But it is
Greg,
good to read it.
You know, what are the things that you would, if you had 4 or 5 things and you said to policyholders, be careful, do the following.
You've mentioned them in your opening, so be careful of being underinsured, and we'll discuss that later in some questions that you've got as well.
Can I just make one comment on underinsurance?
Yes.
People don't realise that the sale value of their property is probably half of the replacement value of their property.
Correct, the rebuild cost.
The rebuild cost. They don't realise that because they say, well, I can only get so much money.
And they say you can buy your neighbour's house for X or Y, and so why should I insure? 8 million, I wish I could get 8 million for my property, can hardly get 4 for it. So and there's a consequence to doing that, and we will discuss that as well. And then obviously when you do renovations in your house, that's a thing called a contractor's policy. So it's not covered by, because remember insurance policies take you, so when you fill a form in, you're telling the insurance company everything about you. This who lives here, this is this, and that's how they insure you. That's the risk they're taking. Now you'd make a change to your house, you do a rebuild, you do a renovation at some sort, you are changing what they are thinking is you're coming home from work and just living day to day. And the third thing, which is non-disclosure. We had a client the other day, had a big claim, 350,000 Rand on a BMW, tried to avoid one of those motorcycles, those delivery bikes, hits a small little pole and then turned the front wheel in on, and it really, so BMW X5, 350. We looked at the claim, it didn't look like 350,000, it was 350. Renewal came, we pushed the premium up by 10%, which we thought was reasonable in terms of, or the insurer pushed the premium up by 10%, which we thought was reasonable. The client came back to us and said, no, hang on a second, you guys are now making it too expensive. And he went to market and he gave us a quote and said, look, I can get the vehicle for X. We looked at the quote and immediately saw there was a thing called non-disclosure. So tell the insurer what is happening, what are you doing, how many claims have you had, what are you using the car for, or whatever else, and that does change the risk profile. We took that same quote because it was a broker market insurer. We went back to that same insurer, fixed up the policy with the right disclosure, and the policy was more.
Yeah. Shane, this must be quite difficult for you at the moment, but this is quite interesting what Greg made. Are companies now rating individual policy? It's not just group rating where everyone the same. They actually look at what your circumstances are and rate accordingly.
Yes, definitely, Brian. I mean, I think that's important to do. You don't want to paint everyone with the same brush at the end of the day. So, look at the individual risk and obviously the claim that the client has had and determine whether it's a profitable account or not. And that's from the broking side as well as the insurer side. But yes, they are looking at them individually rather than on a big scale.
How do you deal with what I've always understood from many years ago, that insurers don't like careless people or unlucky people? So let's just talk about careless. We understand, keep losing something, keep breaking something, keep claiming.
Yeah.
But let's talk about the word unlucky in the South African context.
Yes.
I mean, people are being held up.
Yes.
People are, there's home break-ins.
Yes.
And I think that we've seen all the statistics reflected. Yes. And it's getting greater and greater and greater.
Yes.
How do insurance companies view that? How do they ever make a profit when someone's held up and something serious, a watch is stolen, expensive watch, or come into the home, make them open the safe? How?
So, Bryan, I think to answer that question is, let's take, for instance, a watch, a Rolex watch, for instance. You've insured it and it costs you, let's say, 350 Rand a month to insure that watch, and the value is, let's say, 250. You now have a claim 2 years down the line. The insurer can never recoup that cost.
Yes.
If you look at what you spend in monthly over a 20-year period. So they need to look at the policy holistically and go from there. Break-in, you're talking about unlucky. Yes, you can have break-ins. Again, what precautions have you taken over and above that to try and avoid a future break-in? Have you just left your premises as they were, perhaps not putting up electric fencing, putting in a linked alarm, etc.? So there's many aspects to look at, Bryan.
But let's talk about that. When an insurance company underwrites and does the annual renewal or even short-term renewal,
yes,
will they say, okay, let's have a look at this claim, not just look at numbers?
Yes.
Because, yes, numbers against the premium, how are you ever going to recoup, as you said,
sure,
a 350,000 Rand watch? It's going to take years.
Yes.
Do they actually take that into account and say, you're unfortunate?
So, Bryan, I'd like to then push it on to the advisor and the broking. So from our side, it is up to us to look at what's realistic and unrealistic. The insurers will look at it and say, well, that's the increase they need, let's say a 10% increase. We may look at it and say, well, the client's been with us for 10 years or 20 years. What have they put into the pot over that period of time? And do we feel a 7% or 10% increase is realistic? And we make a decision as a company to say, we actually feel 5% is realistic, and we negotiate with the insurer and generally get it right. So it is, again, very much up to the advisor. I think it depends if you're in the direct market as opposed to the broking market.
Greg, let's come to the financial difficulties. I mean, we've got the two-pot pension system. We've seen the enormous amount of people applying to get funds out of their retirement funds. And these aren't people who aren't working. You can only be a member of a pension fund or prominent if you work. So these are people who can put bread on the table but have overcommitted themselves. We saw interest rates come down last week, which I think, I must tell you personally, and maybe economists will phone and say, I'm talking rubbish, I think it was a joke. To bring interest rates down 0.25%, really, inflation's pushed on us.
Yeah.
I mean, we certainly, our consumers aren't out spending like in the USA. It's pushed on us, and we'll get some reduced inflation rates.
Yeah.
But let's just understand policyholders. When they come to you and say, I just can't afford these premiums any longer, how do I, where can I, what should they be insuring for? What are the type of things that they can do to reduce premiums?
So what we do is, the first advice that we have felt that in the marketplace is just do the catastrophes, because you're not going to survive if the catastrophes. So that'll be just doing the majors. Building, take all the frills out of the policy. So car hires, yes, it'll be inconvenient if there's a car accident, if it's written off and all the rest of it, but take away, because car hire is becoming a noticeable amount of money now. It's costing 100 Rand a month just to insure the car hire component of the policy. So strip out all the...
Most people think that car hire is just thrown in.
Well, it's not. It's all built in.
It's all built into that premium.
Yeah, so the insurers that say that we get 30 days car for free, it's not. If you just look at the underlying premium, the bottom line is it's built in, it's there. There is a cost. I mean, and I don't know if you can take it out of those guys that say it's inclusive, but we can, from a premium perspective, we can see the differential between the. So take out all the bells and whistles out the policy. If your car's not financed, you can go to third-party fire and theft. That takes away that part of it. Again, third-party fire and theft, your own car being damaged. And then you could go into an under-insurance position, but understand what you're doing. So you are under-insured, so you are reducing what you're covering, but understand there are consequences to that. So there are ways and means to try and trim and shape. And then all risks is an expensive part. There are products now that have changed. You don't have to specify everything anymore. Maybe you do qualify for that type. The insurance industry has changed. It has evolved into better products for certain clients. There are still the traditional products where you've got household contents and then you specify ring, watch, or whatever you have, cell phone, and there are products now that you don't need to specify anymore.
Shane, putting goods in the bank, is that still very, very favourable rates? Or are those rates also now moving up?
No, I think they are definitely favourable rates, because your security involved with the bank is a lot higher than what you would have at your normal, physical or home address. So people still do that. But like Greg has alluded to, is that a lot of the policies out there these days are making provisions for very high sums insured on specified items, or items that you don't specifically have to specify individually. Your policy automatically covers them away from home. So we do find certain clients have moved their goods away from the banking side and gone onto these policies, and others haven't. And I think it's an individual's choice.
I think you guys are still too young to remember the Standard Bank in Krugersdorp job. Do you remember it?
No, well...
They went in there, they never found those guys. They never found, they tunneled in, they got into the safe deposit boxes and things like that. And then let's just talk about now holiday season coming on. A lot of people are now renting out homes. What should the owners of these be aware of when they rent out a home?
So when you're renting out a home as a normal person, so when I say normal in the sense of it's just someone that's coming to live there as a residence that they're going to work and back and
pay you.
Yeah,
they're going to pay you for the December
derive
holiday.
an income, correct.
Yeah.
So the insurer just sees that like it's you. Now all of a sudden you're bringing in tourists, you're doing an Airbnb type thing, you're deriving a different, but again it's going back to that disclosure. What are you doing with a home? So you're telling the insurer, I'm actually renting it out as a holiday home to different tourists, and there are products out there that can assist with that type of cover, because if you get an overseas tourist coming into the home, you would want higher covers and all the rest of it. So you again disclose to the insurer what are you doing, and then in turn they will tell you, or not that we will advise them as well in which direction to take depending on the risk of the profile.
So what you're saying is, if you are someone who's renting out a home, just tell the insurance companies.
And the big thing as well, to tell your insurance company when it's unoccupied. So that applies across the board. So if insurers are very nervous when particularly standalone houses where people are moving out. Vagrants people on the side of the road do watch, and before you know it, they've ransacked their house. And usually after 30 days, insurers are saying no cover for malicious damage, theft, and those type of items.
I had a situation recently, a client of mine has been living in a home for 30 years. She moved out on the Monday into a flat. The new tenants were coming on a Tuesday. Monday night, ransacked the house.
Yeah. That's how quick it happens. That's why the insurers are credit. They're trying to give the 30-day leeway, but they're even nervous even with those type of clauses. So tell your insurer when those profiles are changing. They want linked alarms and stuff like that to be in place, even in those one-day moves.
Well, we're going to take a break. When we return, we've got quite a few emails come through, so stay tuned and we'll be right back.